Hello traders, Gary Wagner here, about 1040 in Honolulu, 440 in New York. Markets have closed for Monday, October 26th, and they've closed nominally lower after the dynamic moves that we have seen in this market over the last couple of weeks, last week being a dynamic move. It doesn't surprise me that we're seeing a little bit of backfill coming into the market. Are we going to go into some sort of a small corrective period? Well, it's too early to tell on that. We do have the FOMC meeting scheduled this week, and that can always put some waves in the water, so to speak, some added volatility on the day. Now, the one thing that we do want to realize, this market has just been on fire. It has gone roughly from over the last 5 trading weeks from about 16,000 past 17 to over 17,600. So that's a considerable move. When you figure 5 weeks, we have seen this market move roughly 1,600 points. Now, there has been another big mover today. Not so much the size of the move, but the fact that we have seen the dollar on fire, just stalling right at about 97, 96.80, down 32. So it actually came in and touched on 97. Let's go ahead and pull up a daily chart on the index, but you can see it actually traded just above 97 before finding a little bit of resistance and coming down a little bit. If that's a sign to come, that's something we want to take a very, very close look at as we go into this week. Now, in terms of the Standard & Poor's, we saw that trading lower. Again, nominal change off about 3 points on the day, 2062.75, but really very, very quiet as we look at even the intraday charts, this being a 240-minute chart. You can see that we had very, very small trading ranges and, in fact, had a much reduced volume on the day when we look at it and compare it to the volume over the last 10 trading days. Now, the one market that was not quiet today by any means has been crude oil. Crude oil almost off about 2%, 1.82%, down 81 cents a barrel, trading now below $44. That was the key point we were looking at, was whether or not it would break that. And my sense is right now with that in line and this break, and it's not a solid break because traders were just at around 43 and change, but 43.78. But my sense is that we'll see this market drift even lower over the next week. Now, as far as the currencies go, we can definitely see that this was a counterintuitive day in that the euro dollar, which has been under so much pressure lately, is actually trading higher. Even though it's just trading slightly higher on the day, it is nonetheless trading higher. The yen, which had been trading much stronger throughout last week, this being a daily chart right in here, you can see this last week and into the week just prior to that, from about 118 to 121. So quite a move as it found support right in this area. But that is showing a little bit of backsliding or retracement. That, along with the dollar, which had been so aggressively stronger throughout the week, that is also trading lower on the day. So the markets that we're going to want to look at over this next week are going to be the currencies, oil, and Standard & Poor's. Standard & Poor's, it's an entry point. It's simply where do we enter it? If we're going to go into any sort of correction, we want to kind of take a look through a fib retracement to see where that correction could take us so that we have a good entry point. But we definitely, I believe, want to play that from the long side. Oil, we definitely believe that there's more downside that could be prevalent in that market. And in terms of the currencies, because of the FOMC meeting coming up, we are having also the Bank of Japan. That will be meeting. We really want to see if we return to the trend that developed so strongly over last week, which is higher yen, higher dollar, lower euro. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.